For centuries, fashion has been one of the more colorful ways humans express themselves. Our choices of clothing speak about how we in society are feeling. Who could help but notice the ducktail and black leather of the 1950s delinquent, the tie-dyed shirts and long hair of the 60s hippie, the polyester-clad disco kings of the 70s, the big hair of the 80s or the 90s body piercings? Participants in these trends would certainly be surprised to discover that their fashion statements are also linked to something else.
Many on Wall Street are wondering how much lower can these markets go?
In recent decades, a handful of financial analysts have observed a correlation between the stock market and fashion. In the late 1960s, financial researcher Ralph Rotnam's hemline indicator correlated the length of women's dresses to the rise and fall of the stock market. This became the first roughly quantified measure of the link between popular culture and financial trends.
The indicator said that you bought stocks when hemlines were low and you sold stocks when hemlines were high.
The battle began with a bomb, the HH bomb. HH for higher hemline.
What you're really dealing with are standards of the current times, what the people were going through. Until we got to the late 20s when the flappers came in and, the dresses got a lot shorter and the dances got a lot wilder. Depression came in and all of a sudden the hemlines started coming down again. You gradually started seeing hemlines coming back higher in the late 30s, early 40s, and we got into the 60s with a long-term bull market where hemlines just kept on getting smaller and smaller, and whoever can forget Goldie Hawn running around with those miniskirts on, Rowan and Martin's laughing, but that was the top of the market.
In the early 70s, we'd just gone through a miniskirt phase, and I noticed that hemlines had gone down. People were wearing granny gowns and pantsuits, and as hemlines went down, the market went down.
It wasn't until the mid-80s that market analyst Robert Prechter postulated an array of significant links between popular culture and the stock market. In a 1985 report, Prechter explored connections between stock prices and music, movies, television, and even pop stardom.